Thank you. Mr. Westmoreland for 2 minutes.
Thank you, Madam Chair. And I appreciate you calling this hearing and for giving me the opportunity to make the opening statement. And I also want to appreciate your willingness to include my bill, H.R. 2056, in this hearing. In my opinion, there's no greater threat to our communities than bank failures, especially in my state of Georgia. Since Chairman Blair last testified before this subcommittee, 2 more banks have failed in Georgia. Georgia's grand total is now 65 failed banks. To date, 15 banks have failed in Georgia just this year. I am here today to once again express the profound frustration people in my district have with the FDIC. Banks in Georgia, both strong and weak, big or small, are trying to survive in a market where government is picking winners and losers every day. The banks that are failing now are from paper losses, and by this I mean banks that are forced to write down assets because of mark-to-market and other regulations, which immediately cause a capital call from the regulator. Often this occurs on loans that are actually performing, but Georgia is by no means alone with the threat of bank failures. 10 states have had more than 10 failures since 2008. They are Arizona, California, Florida, Georgia, Illinois, Michigan, Minnesota, Missouri, Nevada, and Washington. Sadly, these states also have some of the highest unemployment and foreclosure rates in the country. The bill I introduced, H.R. 2056, directs the FDIC Inspector General to study FDIC's loss share agreements, banks failing because of paper losses, hardship of being able to modify loans, and the application of the FDIC policies by examiners in the field. For these 10 states, failure on the part of D.C. management to ensure implementation of policies by examiners on the ground has resulted in continued stagnation in the real estate industry, higher than average unemployment, and the steady pace of bank failures. This is why my bill, H.R. 2056, and my colleague's bill, Mr. Posey, H.R. 1723, are so vitally important. 3 years after the events of 2008, 2 years after the recession was said to be over, the regulators testifying today are no closer to finding a solution to the bank crisis, even though you say you have all the tools. I urge the committee to continue to examine this crisis in our communities, and with that, Madam Chair, I yield back.
Thank you. Mr. Luetkemeyer for 1 minute.